Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock comparison between Match Group, ticker symbol MTCH, and Bumble BMBL. And we're going to see whether we need to swipe left or swipe right on these two names. So stick around and find out. All right, so for today's agenda, we're going to give some brief business description. We're going to look at the fundamentals, look at shares outstanding and see if they've been issuing shares. Next, we're going to look at the multiples. Then we're going to take a look at future growth. Then finally, I'm going to give my final thoughts on Match Group versus Bumble. All right, so first up, we have Match Group, which has several different sites. We got Match.com, Tinder, Hinge, Hawaii, Plenty of Fish, and several others. I'm going to throw those up right now. So if you want to pause the video and look at them, go ahead. One of the things that I was surprised to actually find is the allocation towards revenue isn't actually on Match.com anymore, but it's actually Tinder. So Tinder actually makes up a majority of the revenue. If we look at on their investor relations page, they had that Tinder is the #1 download dating app in the world, as well as the highest grossing. Last year they made 1.4 billion in revenue on just Tinder alone out of 2.5 billion. And here's some other things. You can stop and view the video. Now on to Bumble. All right, so moving on to Bumble, I actually was a little surprised here. I thought the only app that they had for dating was Bumble itself. I first came across Bumble when I was in grad school. There were several girls in some of my capstone courses that actually were talking about it just in casual conversation. And it's basically an app where the female initiates the conversation. And so that's the kind of the unique factor in that. There's actually, in my research here, I was surprised that there was actually another app that they own called Badoo, and that's actually more of an international app, and it's very similar from what I've researched to Tinder. I kind of have the number of users. In 2020, at the end of 2020, they had 100 million users on Bumble, and Badoo, as of making this video, had 510 million users. They published that straight up on the site right as you go to it. So that was interesting. Now, in terms of revenue percentage of, I can't tell you which one makes more money, but when we look at the number of paying users on the app, then we can see that it's basically split between Bumble and Badoo, actually having more paying users using Badoo and other paying users. But in terms of total revenue, majority of that revenue is definitely coming from Bumble, because if you look at the revenue paying user, they're actually almost double what the Badoo app, the paying Badoo users are using. So little interesting thing, I didn't realize that they had more than one app. One of the things about Bumble that they promote about themselves is that they're looking. These are users that are looking for commitment. A little bit different than the Tinder side. Also definitely different than Badoo as well. They're saying, men are attracted to women who make the first move. Well, duh. I don't think you really need research to know that. And then women on Bumble are confident first movers. 97% have messaged their matches in the last month. That's duh. Like literally, women have to reach out to the men first. So duh, they're going to be the first movers at that app. So this is just some stuff that they said. And then they also advertise themselves as Bumble is not known as a marketplace for hookups. Less than 4% of men and less than 1% of women are on Bumble looking for hookups. So that is definitely a distinguishing factor in the app, and definitely a reason why the users are on it. They're looking for something a little bit more serious than your Tinder or Badoo. I need to ask them again. Hey, can you hit the like button for me? That'd be awesome. Thank you so much. Thanks for watching. Back to the content. Is that good? All right, so jumping into the fundamentals, on the left we have Bumble, on the right we have Match Group. Now, if we look at the end of fiscal year 2020 for Bumble, we can see that they ended the year with $582 million. Their gross margin at 72%, which is quite healthy. And they actually In the first quarter of 2021, they actually had their first net income. Prior to that, all their net income has been negative. So this is actually a really positive thing to see. EBITDA is pretty solid margins there. Didn't have an EBITDA, which is actually quite strange to see that. But moving over to Match Group, you can see that, again, the thing I have to note here is Bumble IPO'd here recently, so they don't have a ton of historical information, so it's kind of hard to compare year by year. But one of the things I wanted to note on Match Group is they actually had, in December of 2017, they actually had a revenue of $3.3 billion. That dropped down by 50% in 2018 to $1.7 billion, 47% drop, huge hit there. In December of 2019, that raised 18% to $2.05 billion. And then in December of 2020, they were able to bring in $2.4 billion. Their gross margin's healthy as well, in that 73, 74% range. EBITDA looks fairly strong and healthy there. I will note here that even though they had a huge decrease in revenue between 2017 and 2018, their EBITDA remained the same, and even their net income remained relatively high. So looks fairly good there. Fundamentals, at least from a revenue perspective, you can kind of understand that Bumble is definitely, from a revenue perspective, definitely smaller than Match Group by about 4 times. So just keep that in mind as we compare in terms of total revenue of what they're producing. So Bumble is about 4 times smaller than Match Group. All right, so next up I want to go over debt. I want to compare Bumble to Match Group. So first off, let's go to Bumble. Here we have their balance sheet. Let's look at their last quarter, March 2021. They reported $246 million in cash or cash equivalents. We go down to current liabilities. You can see their current liabilities is $201 million, which is good. That means they have enough cash to cover the next 12 months in case they needed it, or well, to basically do business throughout the rest of the year. If we look at their total liabilities, it's $1.2 billion. And then if we compare that to total assets, so $3.7 billion total assets, $1.3 billion liabilities. So they look good there. Their long-term debt doesn't look way out of line with their revenue. So overall, I think that looks pretty healthy for Bumble. Now, moving over to Match Group, they have a lot more history here. I'm going to still stay on quarters because I want to look at the last quarter and compare it to the other previous quarter. So cash and short-term investments, $846 million in liquidity there. If we go down to total current liabilities, 470. So they definitely have enough to cover there by about double. Now, if we compare their total liabilities, 4.4 billion to 3.2 billion in wow, that's so they actually have less assets than they do. Interesting. That's interesting. So they have about $1 billion, $1.2 billion less assets than they do in liabilities. One of the things I think is interesting here that they had total assets of 8.4 billion, and it dropped down in June from 8.4 billion to 2.3 billion between March of 2020 and June of 2020. All right, so I had to stop the video to figure out why there was this big decrease in total assets between 8.4 and 2.3. You see there's a big decrease in other assets here, other intangibles, huge decrease in goodwill, long-term investments, net property. There's also cash and short-term investments up here that dropped substantially by about $2.6 billion just on its own. So huge decrease there. So just between cash and equivalents and goodwill, there's a huge decrease there for them. So the only thing I could find that made any sense here was because they didn't spin anything off. It seems like they were spun off of this IAC holding company. And that's kind of what some of those assets, probably a lot of those assets went to the holding company and were no longer part of Match Group. All right, so with all that being said, essentially what we have is we have total liabilities at 4.4 and we have total assets at 3.2. They are able to cover their current liabilities at 470 million with the 846 million they have in cash and short-term equivalents. Hey, if you're still watching the video, hit that thumbs up button. It helps me out a lot with the algorithm. Now back to the content. All right, so next I want to go to the cash flow statement and I want to look at how much cash flow they had. So if we go to cash from operations, Bumble had negative $46 million minus their capital expenditure. They had negative $49 million in free cash flow. So zero free cash flow, no price to free cash flow on this one. We go over to Match Group, go to the cash flow statement. We'll look at their last quarter. Actually, I want to look at their last fiscal year. Look at 2020. We'll go to cash from operations at 802 minus 42. So $760 million in free cash flow. You'll notice that their free cash flow was declining, even though we saw their net income was declining as well. But we saw that revenue increasing, in our previous stuff. So that's interesting there. But these previous years' net income was a little bit higher. So we'll take note of that. All right, so next up, let's look at shares outstanding for Bumble versus Match Group. In February of 2021, Bumble had 111 million shares outstanding. In June of 2021, as of this month, they had 119.8 million. That's a 7.3% increase in shares in just the last 3 months since their IPO. If we look at Match Group from June of 2020, they had 176.6 million shares outstanding. And in June of 2021, they have 270.2 million shares outstanding. So again, that's a pretty substantial increase in shares outstanding at 53% increase in a 1-year time frame. Before that, it looked like they were paying down, but this is a huge increase, big dilution for Match Group here. So we got to look at to figure out what that means for the stock itself in terms of how much we should pay for it. Now, if we move over into multiples, what these companies are trading for right now, if we look at Bumble, their forward P&E is at 454 times earnings. If we look at Match Group, they're at 60 times earnings forward looking. Historical wise, Bumble doesn't have a P&E. Everything's really negative, so there's nothing to really look at there. Historically, Match Group has traded significantly lower than what they are right now at 27 times earnings, and then in 2018 at 15 times earnings. And then price to free cash flow for Bumble is, as I said, it was negative earlier, so we can't do a price to free cash flow. And then price to free cash flow for Match Group currently in 2020, at the end of 2020, it was trading 51 times. Its current market cap at that 760 million divided by its current market cap, which is around 38. So yeah, it's 51. And then 2019, like I mentioned before, their free cash flow was a little bit higher, and that would have been compared to that free cash flow would have been trading at 43 times its current market cap. So those are its multiples. All right, so both these companies are trading at a pretty high multiples right now. So I wanted to look at growth and see what their growth in terms of rate is going to be looking like. If we look at revenue for Bumble between 2020 and what they're expecting for 2021 with their last guidance they provided in their last earnings call, I'm estimating that to be around 26% year over year growth for the year, which isn't too bad. But again, it's still, they're trading 454 times earnings. So that's pretty high compared to their growth. Looking at Match Group, their growth, I couldn't find a year. I don't think they're providing year guidance for yet. But if we're looking at their Q2 estimates, which is what they provided, their quarter over quarter from last Q2, that would indicate a 22% increase in revenue from their second quarter of last year in 2020. To note, their 2020 was not lower than their 2019. So there actually was year over year growth both years. There wasn't really a hit from the pandemic for Match Group. Another thing I wanted to talk about with Match Group is in one of their investor relationship pages, they're talking about the future of how Match Group is going on this little scale of from marriage to dating, social discovery, interest groups, and social entertainment. And you can see that they look like they're shifting themselves over towards that more social entertainment type, going into social discovery. Really looks like where that larger bubble is going to. And that's really, I think, more towards what Tinder is, right? Is growing it more into a social app, more so than it is strictly dating. And they even specified that that's where the growth is. So that's one of the things that they're interested in. I know that, at least from the Bumble perspective, it seems like, what is it called? Badoo is Badoo's been around for a while. However, I think it's definitely the combat that they have to Tinder. So we'll see how that competition stays. We'll see if there's any changing of the guard here in the next several years. But that's what it looks like for both those groups as they try to grow their apps. All right, so my thoughts on Match Group versus Bumble. First off, we have Match Group, which is pretty well established, have several different names that they have under their belt. They definitely have the Tinder, which is definitely holding the line for them right now. Seems to be doing well, large revenue growth. They've also been growing revenue. I think their last other platforms combined had a 30% increase in revenue. So it seems like they have a fairly good backlog of products that they're trying to grow. But again, they're still really dependent upon Tinder. When we look at Bumble, it's the same kind of situation where they're not well diversified. They have two main apps that they're using, Badoo and Bumble, obviously. And again, Bumble is pretty well established at this point. It's still fairly new. I think it still has growth to be had. And we'll have to see which one's the better app in the end. It seems like these apps come out of nowhere. They're kind of like a fad. People catch on to them, they flock to them, and then they use them. Tinder's been around for quite a while, hasn't really gone away. I expect something similar to Bumble, just different for different audiences, right? So if you go into the fundamentals perspective, looking at the financials, honestly, there was a little hope there, I thought, for Bumble in the next couple years. We saw net income actually go positive for them for the first time in the last 4 quarters. Actually the last 2 years. If we looked at their free cash flow is negative, don't like to see that. I want to see that come positive at some point. But again, this company is definitely in a growth phase. I am concerned that their price to earnings is definitely 454 times forward earnings. So by the end of this year, they'll be trading at 454. If they just stay stagnant at the current price, that's pretty crazy. The other thing that's insane to note here is that they're trading almost double their current stock price, 3 months ago when they IPO'd. So think about that being doubled. So that could have been trading almost 900 times future earnings, which is just absolutely crazy. It's almost Tesla, right? So there's no way. But I think there is definitely a price for Bumble to pay. If we go over into growth-wise, they definitely have a strong growth for the platform. Now, year over year, that's going to be pretty powerful. If they can do that quarter over quarter, it's even going to be better. If we look at their debt load, they definitely have enough assets to cover them throughout the next year. That's good. They have more assets than total liabilities. I like that. If we look at the Match Group, the revenue looks to be increasing in the last 3 years. That's good. I didn't like seeing that hit in revenue from, I think it was 2017 to 2018. That was kind of concerning. I don't know why that was. But free cash flow was growing. Net income appeared to be growing. The price to free cash flow was still fairly high at 51 times. it still seems like this company is being priced as a growth company, even though it's still fairly well established company. It's been around for a while. Tinder is definitely their biggest revenue source of revenue. Tinder's definitely their biggest source of revenue. However, it definitely is the big risk is this your kind of singular focus. So if there's a big shift in where users are going, if there's other opportunities for people to find something that they can use to do the same thing, or become the fad kind of disappears, it's definitely a big risk the company faces as people would move off of that app. So you have to be very careful with that, where the app could be a short-term thing. Now, I think these two apps are probably going to be around for a while. But again, it was very surprising to me that most of the revenue was coming from Tinder and not from Match.com. When I started this analysis, I thought Match.com would definitely be the biggest revenue driver in their company. That was not the case. I was very surprised. I was also surprised that their growth from year-over-year growth for Q2 is going to be at 22% higher than it was in the year-over-year quarter. So that's actually surprising to me as well. The last thing I wanted to note is the share dilution at Match.com or at Match Group is absolutely crazy. 53%. That's terrible. Okay. I don't like seeing that. I am very surprised. That could be why their price to earn future earnings is so high, because they diluted themselves by so much. And again, the stock price isn't reflecting that right now. So again, that's also something very challenging an investor has to look at, is seeing that dilution, and hopefully that trend doesn't continue. Right now, even if they started to buy back their shares, they're at an all-time high, so it wouldn't be advantageous to buy back shares. So maybe they issue new shares. I don't know. If you're overvalued, I guess maybe it makes sense to issue new shares, but still dilutes the existing shareholders. So I don't like being in that situation personally. So interesting comparison here between Bumble and Match Group. Both of them really good, solid apps between both of them. I think they definitely have good growth drivers in both. They both are just very highly priced in terms of what I like to see. I don't like seeing anything. I like something closer to a P&E of 20. Higher growth things, in the 60s maybe. But again, just Bumble being at 454, I think that's absolutely crazy. Now, let's say they doubled their revenue. Just trying to think off the top of my head here. If they doubled their revenue closer to what Tinder is, that would still not get them. That still would not get them to where they need to be. It's a really challenging situation for them. So I think you need to wait on Bumble. And if you want to go into Match Group, I would look a little bit deeper into why they diluted themselves so much with the shares outstanding. And then also figure out why that revenue decreased between 2017 and 2018. Those be two big questions I would need to have answered before I could advise an investment on Match Group. So those are some things to think about when investing in Bumble versus Match Group. So hopefully you enjoyed today's video. Thank you so much for watching today's video. Please hit that thumbs up button, hit subscribe. Thanks so much for watching. Frank Finance out.